preparing for a compliance officer at Wells Fargo interview. You've reached Candy Mentor and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like and share, and drop a topic request in the comments. Question 1. How would you describe the role of a compliance officer at Wells Fargo? A compliance officer helps the business operate within laws, regulations, policies, and customer expectations. At Wells Fargo, I would see the role as both advisory and control-oriented, identifying regulatory risk, interpreting requirements, monitoring execution, and escalating issues early. The best compliance partners are practical. They do not just say no, they help design compliant processes that protect customers, strengthen controls, and support sustainable growth over time. Why answering? Focus on advisory oversight, regulatory interpretation, monitoring, escalation, customer protection, and partnership with the business. Tie the role to Wells Fargo's heightened focus on risk discipline and trust rebuilding. Question 2. Why do you want to work in compliance at Wells Fargo specifically? Wells Fargo is attractive because compliance here has real impact. The bank operates across consumer banking, commercial banking, wealth, payments, and lending, so regulatory risk is broad and meaningful. I am also drawn to the firm's continued focus on strengthening controls, accountability, and customer outcomes. I want a role where compliance is not a back-office formality, but a central partner in rebuilding trust and improving how financial services are delivered. Make sure to cover Wells Fargo's scale, regulatory complexity, customer-centric transformation, risk management emphasis, and your motivation to contribute to a stronger control environment without sounding generic or overly critical. Question 3. Tell me about a time you identified a compliance issue and escalated it. In a prior role, I noticed a recurring exception where customer disclosures were being sent after account activation instead of before it. I reviewed the procedure, pulled a sample, confirmed the pattern, and documented the potential regulatory and customer impact. I escalated it to compliance leadership and operations with a proposed fix, system gating plus retraining. The issue was remediated, testing was added, and late disclosures dropped materially in the next review cycle. In your answer, use a clear situation-action-result structure. Emphasize evidence gathering, materiality assessment, escalation judgment, stakeholder communication, remediation tracking, and professional courage when the issue is sensitive. Question 4. How do you approach risk-based compliance monitoring? Risk-based monitoring means I do not treat every process equally. I prioritize areas with higher customer impact, regulatory exposure, transaction volume, change activity, or weak control history. I start by understanding the obligation and control design, then select testing steps and samples that address the real risk. Findings should be well supported, rated consistently, and translated into action plans. Monitoring only adds value when it leads to timely remediation and better future controls. Be sure to mention inherent risk, control effectiveness, customer impact, prior issues, regulatory change, transaction volume, sampling methods, documentation, and how monitoring results should feed into remediation and reporting. Question 5. What is the 3 lines of defense model, and where does compliance fit? The 3 lines of defense separates ownership, oversight, and independent assurance. The first line owns the risk because it runs the business process. Compliance typically sits in the second line, setting expectations, advising on regulations, monitoring, and challenging whether controls are adequate. Internal audit is the third line, independently assessing both the business and oversight functions. The model works only when responsibilities are clear and the first line remains accountable for compliance outcomes. Talk about first-line ownership, second-line oversight and challenge, and third-line independent audit. Clarify that compliance guides and challenges the business, but does not replace business accountability. Question 6. How would you handle pushback from a business partner who thinks compliance is slowing down a product launch? I would first understand the business deadline and what they believe is being slowed. Then I would explain the specific regulatory or control risk, not just cite policy, My goal would be to offer compliant options, such as phased rollout, revised disclosures, additional controls, or targeted approvals. If the risk remained unacceptable, I would document the concern and escalate through the right governance path. Compliance should enable safe execution, not create unnecessary friction. While answering, focus on collaboration, listening, explaining risk in business terms, offering alternatives, documenting decisions, escalating when necessary, and balancing speed with customer and regulatory obligations. Question 7. What would you review when assessing UDAAP risk in a consumer banking process? For UDAAP, I would look beyond technical compliance and ask whether the customer outcome is fair and understandable. I would review marketing, disclosures, fees, account terms, servicing scripts, complaint trends, and exception handling. I would also examine whether incentives could encourage behavior that harms customers. A process can meet a narrow rule but still create UDAAP risk if customers are misled, surprised by fees, or unable to reasonably avoid harm. Make sure to cover unfair, deceptive, and abusive acts or practices, customer harm, fee transparency, disclosures, servicing practices, complaints, vulnerable customers, incentive structures, and end-to-end process testing. Question 8. How do you stay current with regulatory changes relevant to banking compliance? I use a structured approach rather than relying on headlines. I follow updates from agencies such as the CFPB, OCC, Federal Reserve, FinCEN, SEC, and state regulators, depending on the business area. I also review enforcement actions because they show regulatory expectations in practice. Once a change is identified, I would assess impacted products, policies, systems, controls, training, and monitoring routines. The key is turning regulatory intelligence into operational change. In your answer, mention regulatory alerts, agency guidance, enforcement actions, industry publications, internal legal updates, policy inventories, impact assessments, and converting changes into procedures, controls, and training. Question 9. What are the key elements of an effective compliance testing program? An effective testing program starts with clear scope and the regulatory requirements being tested. The methodology should define the population, sample approach, control expectations, evidence needed, and pass-fail criteria. When exceptions are found, the tester should evaluate root cause, customer impact, and whether the issue is isolated or systemic. Strong reporting is factual and actionable. Finally, corrective actions must be tracked and validated. Otherwise, testing becomes diagnosis without treatment. Be sure to discuss scope, risk assessment, regulatory mapping, sample selection, testing methodology, evidence standards, issue rating, root cause analysis, reporting, management responses, and validation of corrective actions. Question 10. How would you investigate a spike in customer complaints related to a banking product? I would start by segmenting the complaints: product type, branch or channel, geography, issue category, customer impact, and timing. Then I would review whether a recent change occurred, such as a fee update, disclosure revision, system conversion, or sales campaign. I would compare complaints against call recordings, procedures, training, and account data. If harm or regulatory risk appears likely, I would escalate, support remediation, and recommend controls to prevent recurrence. Talk about complaint categorization, trend analysis, customer harm, product feature review, frontline practices, system issues, regulatory implications, escalation, remediation, and using complaint data as an early warning indicator. Question 11. What does a strong issue management process look like? Strong issue management is disciplined from discovery to closure. The issue should be clearly defined, rated based on risk and customer impact, assigned to an accountable owner, and supported by root cause analysis. The action plan needs specific milestones, not vague commitments. Progress should be reported through governance, with escalation for delays or scope changes. Closure should require evidence and independent validation so the organization knows the fix actually worked. While answering, focus on issue identification, severity rating, root cause, ownership, action plans, deadlines, governance reporting, customer remediation, independent validation, and avoiding repeated or extended overdue issues. Question 12. How would you assess whether a compliance control is well designed and operating effectively? Design effectiveness asks whether the control, if performed as intended, actually addresses the risk. I would review the control objective, regulatory obligation, owner, frequency, inputs, evidence, and escalation path. Operating effectiveness asks whether it worked consistently during the period tested. That requires samples, documentation, exception review, and timeliness checks. A control can be beautifully designed, but ineffective if it is not performed, not evidenced, or not linked to remediation. Make sure to distinguish design effectiveness from operating effectiveness. Include control objective, risk coverage, frequency, ownership, evidence, exceptions, timeliness, system dependency, and whether the control prevents or detects issues. Question 13. What is your understanding of BSA/AML compliance in a large bank environment? BSA/AML compliance is about preventing the financial system from being used for money laundering, terrorist financing, sanctions evasion, or other illicit activity. In a large bank, that requires strong customer due diligence, beneficial ownership collection, risk rating, transaction monitoring, sanctions screening, investigations, and suspicious activity reporting. The challenge is scale. Alerts must be handled consistently and timely. Good AML compliance combines technology, trained judgment, documentation, and escalation discipline. In your answer, cover customer due diligence, KYC, transaction monitoring, suspicious activity reporting, sanctions screening, risk rating, beneficial ownership, record keeping, governance, and the importance of timely escalation. Question 14. How would you explain fair lending risk to a non-compliant stakeholder? Fair lending risk means customers must receive equal treatment and access to credit, regardless of protected characteristics such as race, gender, age, or marital status. I would explain it through business decisions. Marketing, underwriting, pricing, servicing, and loss mitigation can all create risk. Even neutral policies can produce disparate impact if not monitored. For a stakeholder, I would connect fair lending to data quality, consistent procedures, documented exceptions, and customer trust. Be sure to explain equal access to credit, disparate treatment, disparate impact, redlining, pricing or underwriting disparities, protected classes, data analysis, documentation, and business consequences of weak controls. Question 15. Describe a time you had to interpret a policy or regulation with ambiguity. I once reviewed a disclosure timing requirement where the rule was clear, but the digital workflow created uncertainty about when delivery was considered complete. I compared the regulation, internal policy, regulator guidance, and system evidence. I also consulted legal and operations to understand feasibility. We documented a conservative interpretation, updated the procedure, and added evidence retention. My approach with ambiguity is to be practical, defensible, and focused on the rule's purpose. Talk about how you identified the ambiguity, researched guidance, consulted legal or subject matter experts, considered intent and customer impact, documented rationale, and communicated a practical decision. Question 16. How would you support a regulatory exam or internal audit request? I would treat an exam or audit request as a controlled process. First, I would clarify the request, owner, deadline, and required format. Then I would coordinate with the right teams to gather complete evidence, perform quality checks, and ensure responses are accurate and consistent. I would avoid speculation and flag gaps early. Strong exam management is about transparency, organization, and credibility. Regulators and auditors should see that the bank understands its risks. While answering, focus on responsiveness, accuracy, evidence integrity, request tracking, privilege awareness, coordination with stakeholders, quality control, issue transparency, and avoiding speculative or incomplete responses. Question 17. What metrics would you use to report compliance risk to senior management? I would use metrics that show both activity and risk outcomes. Examples include open issues by severity, overdue corrective actions, repeat findings, testing exception rates, complaint trends, training completion, policy exceptions, control breaks, and regulatory change implementation status. I would also highlight customer impact and trend direction, not just counts. Senior management needs a concise view of where risk is increasing, what decisions are needed, and whether remediation is on track. Make sure to mention balanced metrics, including issues, overdue actions, testing results, complaints, training completion, regulatory changes, policy exceptions, control failures, customer impact, and trend-based reporting. Question 18. How do you balance being detail-oriented with meeting deadlines in compliance work? Compliance work requires accuracy, but perfection cannot become paralysis. I prioritize based on regulatory risk, customer impact, and deadlines. For complex reviews, I break the work into milestones, use checklists, and confirm expectations early. If the timeline threatens quality, I escalate with options instead of waiting until the deadline. My standard is to produce a defensible conclusion supported by evidence while keeping stakeholders informed about assumptions, limitations, and next steps. In your answer, discuss prioritization by risk, planning, checklists, stakeholder communication, escalation of constraints, quality standards, documentation, and knowing when enough evidence supports a defensible conclusion. Question 19. What would you do if you discovered a senior employee bypassing a required compliance control? I would not ignore it because the person is senior. I would first verify the facts and preserve relevant evidence, avoiding accusations until I understood what occurred. Then I would escalate through the appropriate compliance, risk, HR, or ethics channels based on the nature of the control breach. I would assess customer, regulatory, and operational impact. The key principle is consistent accountability. Controls only work if they apply regardless of title. Be sure to emphasize integrity, fact-gathering, confidentiality, documentation, escalation through appropriate channels, non-retaliation, customer or regulatory impact assessment, and not allowing seniority to affect control enforcement. Question 20. What makes you effective in a compliance role at a heavily regulated institution? I am effective because I combine judgment with execution. I can read policies and regulations carefully, but I also know how to translate them into business actions, controls, and clear recommendations. I am comfortable challenging stakeholders respectfully and documenting my rationale. In a large institution like Wells Fargo, compliance requires credibility, consistency, and follow-through. My focus would be protecting customers, escalating issues early, and helping the business operate sustainably. While answering, connect your judgment, communication, regulatory curiosity, documentation habits, independence, stakeholder management, analytical skills, and commitment to customer outcomes with Wells Fargo's need for strong risk culture. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.